way to help the homeless in my community learn computer skills and build a basic resume. I don't just wear the shirt, I live it.
Give, advocate, volunteer. Live United. Go to liveunited.org. Brought to you by United Way and the Ad Council.
My name is Whitney Allen. I am a widow. My husband, Ryan, died. We never thought in a million years we'd have to use life insurance. The unexpected happened. With Ethos, it is so fast and easy. It's 100% online. You can get a quote in seconds, apply in minutes, and get same-day coverage. No medical exams, and you can get up to $3 million worth of coverage through Ethos.
Get your free quote at ethos.com/term. That's ethos.com/term.
Time spent on application may vary. Online health quote.
This is the Money Matters Radio Network, WBNW 1120 AM and W275CM FM. Concord, Boston, the Money Matters Radio Network.
Here at the Massachusetts Department of Elementary and Secondary Education, we are committed to all students not only attending, but succeeding at school. Your presence is powerful. Share why you attend at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, the grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
Are you over the age of 50? Want peace of mind and financial security for your family? Here's an important message to you from Senior Care USA. The average funeral now costs over $10,000. That leaves your loved ones the burden of paying your debts and funeral costs. Our plans start as low as $1 per day and will pay your family up to $30,000 to help pay for your funeral and other expenses. There are no medical exams. Your rates will never increase, and your plan cannot be canceled, regardless of your medical conditions, as long as you make your premium payments. Get up to $30,000 in final expense insurance. Call now for free information. Just answer a few simple questions and get approved right over the phone in just a few minutes. Call right now.
Call 800-378-3818. 800-378-3818. 800-378-3818. That's 800-378-3818.
Marc Vonner is the CEO of Veterans Development Corporation. His dedication to serving our veterans has made an incredible impact on his family and employees. And he is so proud to be the presenting sponsor of the DAV 5K Boston.
This is Brittany Vonner. I'm a registered nurse who is now working as an assistant project manager at Veterans Development Corporation. Working with my father, Marc, has been an incredibly rewarding experience. Our company is dedicated to serving VA hospitals and veteran communities. We don't just build facilities, we build environments that support healing, resilience, and family. We are so proud to see our work directly impact the lives of veterans and the professionals who care for them. This rich history is why we care so much about supporting great organizations such as the Disabled American Veterans, Department of Massachusetts, and the work they do to care for our veterans.
Join Veterans Development Corporation in thanking our great American heroes. Please visit dav5k.boston to show your support today.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today we're talking about estate tax reduction and asset protection strategies that can help reduce or eliminate your estate taxes. Todd, there have been major changes with the Massachusetts exemption amounts. What is the new exemption for the state? Does that mean that a married couple living in Massachusetts with $4 million in assets could eliminate their estate taxes?
So, yes, there has been some changes. Now we're almost a full year in, of course, heading into a second year into the change. The change is now $2 million. It used to be $1 million for estate tax exemption. Now it's up to $2 million. And yes, if you are married, but you actually do trust planning, you can shelter $4 million. But folks, that doesn't mean that's all you do. For folks with $3 million that want to eliminate taxes, we can do that, but we can also think about protecting assets from the cost of long-term care. It allows us to do both a little easier now with a higher estate tax exemption. So think about ways in which you can use the irrevocable trust to not only shelter and be able to reduce your estate tax by sheltering up to $2 million on the death of each spouse, but also starting that important 5-year waiting period running to protect those assets from the cost of long-term care.
The law firm of Cushing & Dolan have been helping families like yours for more than 40 years. Request your copy of Todd's brand new guide. It's called Balancing Asset Protection and Avoiding Estate Taxes. You can call 866-848-5699. That's 866-848-5699. Or you can request the guide from their website, LegalExchangeShow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Mike Armstrong and Marc Fandetti. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends. Plus, breaking Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support B5K.Boston and making a donation today. This is the Financial Exchange. Fandetti.
Good morning. Welcome back to the Financial Exchange. Happy Tuesday. Hope everyone is, if you're getting snow, staying safe, not riding the tail of any plows out there or trying to pass them while they're doing their jobs. Here, closer to the Boston area, we are getting precisely 0 snow, so quite the disappointment here in Needham, Massachusetts, where we broadcast our show from.
Disappointment? Is that the word you chose?
Yeah.
Oh, interesting choice.
I've said this over and over again, Tucker. I will gladly take a foot of snow over 36-degree rain. Any day of the week.
No.
Any day of the week.
That's crazy.
Any day of the week. I will take
your own driveway?
I snowblow.
Sorry for asking.
I snowblow my own driveway.
All right.
You walk
the walk.
I can deal with these things. I have also occasionally been away and not done it and have that nice frozen slop at the end of the driveway. But nonetheless, hope everyone is being safe out there. For those who are getting some snow, we are officially disappointed here on the Financial Exchange, although Tucker seems to be doing all right with it. Sam Altman has issued a code.
You don't have sorry, too much info maybe. Your commute is shorter than some people's.
Yeah, my commute is considerably shorter than the average American.
That would color your view of snow.
Yeah, it definitely would. I am very spoiled on that front. Let's see, founder, CEO, both of OpenAI, the maker of ChatGPT, has issued a code red across the board. So we'll be discussing what that might mean for ChatGPT, the AI sector generally. We have got outlets once again calling it crypto winter. And Tucker, I'd love for you to be able to pull some stats on that, but I feel like it's probably been described as crypto winter at least 5 times in the last 7 years would be my guess. So new crypto winter might be upon us here, according to media. And before all that, though, we're going to start off with the Federal Reserve because in 8 days we have a Fed meeting with a bunch of seemingly divided and confused Federal Reserve members on where to go next. So that's our top story of the day, Mark, and we will start right there with the Bloomberg piece that the Fed has rarely been so divided over its long-term plan for interest rates. And I suppose you could describe that as true, but the division is pretty clear. There are a number of either Donald Trump appointees or those who are going for the role of a Donald Trump appointee who are pretty strongly in favor of dramatically lower long-term interest rates. And then you have pretty much everybody else. And I think what will be interesting is, does this division remain after there has been a pick for the chairman of the Federal Reserve going forward? Because right now I think there's a fair bit of posturing about what people are saying publicly versus actually believing.
Everything's, with respect to monetary policy, it's in complete disarray. I've never seen or read about anything like it in the modern era. And it's in disarray because the president wants to control the Federal Reserve. So he's upset the traditional calculus that goes into the Fed trying to strike a balance between inflation and unemployment. If you keep in mind the Fed's job is to act like the economy's thermostat to cool it down when it's running too hot and there's too much pressure on prices, i.e. inflation is accelerating. The Fed's job is to cool down the economy under those circumstances or to stimulate the economy, which it does through its main policy tool, lowering its federal funds rate, its short-term interest rate target, when labor market conditions appear to be weakening, which they do, by the way. So there's an argument for lowering rates, but not as aggressively as the president wants them lowered and as his appointee to the Federal Open Market Committee, the body that makes the interest rate decision, wants to see them lowered. So it's a really weird combination of factors, Mike. You've got the labor market, as you and Chuck talk about a lot, it is weakening, so there's an argument for cutting rates. But there are people who want to cut rates by, frankly, absurd amounts that are not called for by any type of clear-headed thinking about the economy.
So what do we consider to be longer run? Because we obviously have the dot plot. And the dot plot, for those who are unfamiliar, is it 4 meetings a year they do the dot plot? The summary of economic...
It's every other meeting.
Every other meeting, yeah.
So roughly 4.
Yeah, roughly 4 a year. They put together these projections for longer-term rates. And so I'm looking at it right now. You can look at it, too, on the CME Group website, among other places. And they plot out every Federal Reserve member's viewpoint on rates going from 25 through 2028 and then what they describe as longer term. And to be fair, there does seem like a fair bit of division when you look at this. You have one Federal Reserve member by 2027 thinking that interest rates should be below 2.5%. You've got 2 Federal Reserve members that believe they should be nearly 4%. That's a pretty wide divergence. But I guess my question is, is this getting too publicized? Because when I look at this dot plot, yeah, it's, between 4 and 2.5%. That's a pretty extreme number. But is that truly so outside the norm for the Federal Reserve to have Fed members saying that, one member thinks that rates should be...
Yeah, it is. It is unusual, historically speaking.
It is, yeah.
It's
much more narrow.
But we know we know the reason for it. The president's putting pressure. You could say you think this is great. You could say you think it's a tragedy for independent monetary policy and for stable inflation. I fall in the latter camp. But again, honest people can sort of disagree. There are some people who think politicians should directly control the money supply and therefore interest rates. Everywhere that's been tried, though, it's led to very high inflation and economic instability because you can't, if you're a politician, you have to succumb to the temptation to stimulate the economy.
Which means lower interest rates, which, over the following
years...
No
politician's going to pound the table for higher interest rates.
You don't get elected on recession.
What sane politician would call for recession to squelch inflation? Nobody would. They've tolerated it historically in the modern era, but even then, there's been a lot of behind the scenes brawling and pressure put on the Fed. So I understand those who think rates should be relatively high. I mean, relative to the average FOMC member.
Sure.
Because inflation remains elevated, and everybody listening knows that prices have not come down. That's not the president's fault, by the way. That's not necessarily the Fed's fault. Prices have not come down in the modern era. And when I keep using the phrase modern era, I just mean mostly since World War II, with a couple of very brief exceptions that were characterized by dramatic and nauseating economic contractions. Prices don't fall anymore. They used to under the old gold standard because there were other considerations there that dictated the inflation rate. So price growth, inflation, is somewhere in the mid-2s to mid-3s based on trend measure. That's fine because that's actually where the last reading was year over year. And if you're going to call it 3, you have to say that's elevated because the Fed's goal is 2, which it has not met in ages for nearly a decade. So it's odd that anybody would argue for aggressively lowering interest rates unless you think the economy is about to fall off a cliff.
Right. And that is not the opinion that those who are seeking the leadership role are voicing. They are not opining that the economy is about to fall apart. They are merely saying that rates need to be lower in order to continue the economic.
And this makes sense, right? I think you don't have to be like a monetary policy aficionado to recognize that if normally when you're calling for much for aggressive monetary stimulus, it's because you're really worried about the economy. There are in the area of floating exchange rates when you don't have to worry about the value of the dollar. The Fed doesn't worry about the value of the dollar anymore like it used to early 1970s. The only reason you'd call for dramatically lower exchange rates abruptly is that you think the economy's in big trouble.
Moving on from the longer term disagreements, can we focus in on the meeting in 8 days? Because I thought that this was a little bit silly, but I'm kind of coming around to the argument that they should just delay this meeting. I don't really see just genuinely here, you do not have any economic data on the state of the economy since September.
Oh,
and so
delay the action, you mean?
Yeah, delay the action.
Not the meeting, but just say, look, we're going to...
You could just say, hey, we're having our meeting and we're not going to do anything until a week later when we determine what the hiring pace was for October and November, until we determine what the inflation rates were for October and November. Not that that should be the end-all, be-all of what's driving your monetary policy, but it just seems to me that there's really a no-win situation for the Fed here as they are trying to assure the general public that they know what they are doing. Any decision you make at this next meeting is going to be made in a blanket of uncertainty. And so why make a decision?
Thick. There's always that blanket. It's an unusually thick blanket.
Yeah, this all comes from the government shutdown, by the way. They did not get any data releases. The data releases that we're getting right now reflect collections from September, which are, in my opinion, irrelevant to what we are seeing right now. And so you will get a whole slog of data in the week after the Federal Reserve meeting. And so I'm just envisioning this scenario where the Fed decides to continue on their current path, which would be for another 0.25% cut. And subsequently, you get an inflation reading that's 3.2% and hiring rates that are in the 200,000 range. It would just seem to me that there's no good reason that you have to go forward with this interest rate decision in December. So maybe they won't. Maybe they will just say, hey, we're not doing anything. We're not cutting rates. We're not increasing rates. But I don't know. Sticking to this schedule just doesn't make a whole lot of sense to me. Let's take a quick break. When we come back, we were talking about the K-shaped economy yesterday. The Associated Press is going to answer for us why everyone and their mother seems to be talking about the K-shaped economy now. That's next on the Financial Exchange.
Keep talking. Go ahead.
No, we are not going to do that next. We are instead going to do it now. Go ahead.
Silly computer.
Oh, we didn't talk about Hassett, who's seemingly going to be the president's appointment.
The president was asked about his appointment. Somebody asked him specifically if it was Kevin Hassett. He did not answer.
Yeah, so it's
probably
Hassett.
It's probably Hassett.
Hassett's done a good job carrying water, and I don't mean that negatively. He's been a good, dutiful head of the National Economic Council.
Yep.
And was a respected economist. He's become more of a hack lately, but there was a time, by coincidence, I found his name in the footnote of a paper over the weekend, written like 30 years ago. So there was a time when he was a respected, nearly prominent economist. So at least my point is, at least he can read a modern paper in economics, unlike the other potential candidates.
And again, I will just point out that he is a member of an administration now, and his job, at least in part, is to be the voice of the president now. And so when he's appointed to the Federal Reserve, we've seen that change. And
he might,
you could say the same thing.
Become Thomas Becket.
You could say the same thing about, oh gosh, I'm forgetting her name.
Oh, now Tucker wants us.
Who was the previous Federal Reserve Chair?
Janet Yellen?
Janet Yellen, right? She joined the Biden administration, and then you started hearing some things that I was like, wow, I don't think I would have heard that from her mouth as Federal Reserve Chair. Quick break. When we come back, K-shaped economy is next.
This is your home for the most comprehensive coverage of the economy and the trends on Wall Street. This is the Financial Exchange Radio Network.
We're proud to announce that Circle K is now the official convenience store of the DAV Department of Massachusetts. At Circle K, supporting those who bravely served our country isn't just a commitment, it's a heartfelt mission. Circle K is honored to stand with the DAV Department of Massachusetts to ensure that veterans receive the care and recognition they deserve. If you'd like to do your part, please visit davma.org. Thank you for standing with Circle K and the DAV Department of Massachusetts, and thank you, veterans, for all you've done.
New Englanders love the Caribbean, and now there's a Caribbean travel channel available for you to learn all about Caribbean culture while you're planning your next trip to your favorite island. The TravelShareIt.com marketplace is loaded with information about the arts, festivals, food, and music throughout the Caribbean, and is an interactive website featuring daily travel deals to any island of your choice. Book your next Caribbean vacation on the most comprehensive travel channel for the islands, TravelShareIt.com. That's TravelShareIt.com.
Marc Vonner is the CEO of Veterans Development Corporation. Marc faithfully served his country from 1981 to 1984, and we're thrilled to have him as a partner and presenting sponsor of the DAV 5K Boston. Marc comes from a proud military family that includes his father Victor and brother Timmy. Marc talks often about how serving his country was one of the greatest achievements of his life, and it's one of the main reasons he chooses to give back to this special community. Marc is honored to continue the legacy that his father started when he built Veterans Development Corporation. Working to help many disabled veterans and their families has become a lifelong goal for Marc, and it's why he's taken the time to fully support the Disabled American Veterans Department of Massachusetts. You can join Marc and help our great American heroes today by making a donation to support the DAV Department of Massachusetts. Please visit dav5k.boston. That's dav5k.boston.
The Armstrong Advisory Group understands retirement planning, and when it comes to married couples, it can be about more than money. Hi, this is Mike Armstrong, and our new guide called Retirement Planning for Spouses tackles many issues that couples face as they're preparing for later life. This guide keeps things simple, focusing on important matters such as making sure both partners understand where their money's coming from in retirement, being aware of scams, how to stay organized if one spouse outlives the other, and ways to handle gifts, donations, or legacy goals as a team. It's a straightforward look at the steps every couple can take to feel confident about retirement. Call the Armstrong Advisory Group right now at 800-393-4001 to get your free copy of Retirement Planning for Spouses. That's 800-393-4001, or you can request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
Miss any of the show? Catch up at your convenience by visiting financialexchangeshow.com and clicking the on-demand icon where you'll find all of our interviews and full shows. This is your home for the latest business and financial news in New England and around the country. This is the Financial Exchange Radio Network.
The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Planning is well underway for the 2026 DAV 5K. If you weren't able to attend this year's race but would still like to help our great American heroes, please visit dav5k.boston and make a donation. Your participation helps provide vital services like free transportation to medical appointments and safe housing for single veterans and their families. Donate today at dav5k.boston. That's dav5k.boston.
So, Mark, I don't know if you have taken as much notice as Tucker and I have, but major news publications like the Journal, New York Times, maybe less so in the Financial Times, but CNBC have been taking up the term K-shaped economy with increasing frequency, it seems to me. It's getting more and more mentions. And the AP attempted here to put together some reasoning for it. They describe what is, in their opinion, unusually muddy, convoluted period for the U.S. economy. They blame consumer spending still rising, Americans being less confident, growth appearing solid, yet hiring being sluggish, unemployment rates starting to tick up, AI-related data center construction soaring while factories laying off workers, home sales being weak. And I guess I ask you, it honestly doesn't seem all that much muddier and more convoluted than other periods. I would say that 2020 through 2022 were extremely convoluted and muddy.
Yeah.
I think that was hopefully once in a lifetime type event, and the solutions to it proposed by the government were, largely untested and really, really new. And that was muddy, unclear how it would proceed, and, we saw a spike in inflation. When I'm looking at 2023 through 2025, I'm looking at an economy that, to me, is behaving pretty logically for one
overall,
where, you're seeing government deficit spending at 6% annualized. You are seeing, right? Like
we say it so casual,
right? Like it's crazy.
That's an emergency level deficit. We've just become. I'm not talking about the trade
to.
deficit, which is not an emergency. I'm talking about the budget deficit.
The budget deficit, yeah. The collections of tax revenue versus government spending. We're running at deficit levels of 6% of GDP.
Insane.
And at the same time, you have an economy that is cooling off from the previous record levels of deficit spending spent during that muddy waters time.
I like the K-shaped figure of speech. Maybe we should just define that, because people are going to continue to hear it.
Sure.
If you think of the capital letter K, it's got one, what would you call those things that go off the vertical? They kind of point diagonally. The horns?
I was going to say the horizontal.
The K has one line going up and one line
we've all seen a K
going
before.
down.
Yep.
Okay, well, but think of...
Everyone here was thinking of a cursive K, so I get it.
It may not be out. So why do we call the economy K-shaped? Well, because for one cohort, let's call it the top 1%, even though it's a little bit broader than that, wages are going up and other measures of well-being are going up. So you would, if you were going to describe the economy and you tried to do it with one line, you could, but it would be something with a slightly positive slope. It would not capture the experience of a big part of the population.
Yep.
So if you were kind of modeling this phenomenon, you'd instead model it with two trend lines, if you will, one pointing up like the upper part of the K and one pointing down like the lower part, because for the non-say top 10% decile of earners or whatever measure you're using, things aren't getting better. In fact, in real terms, in inflation-adjusted terms, they're getting worse. So that line points down. So I sort of like the visual that conveys.
I do too. I keep going back to how am I to make use of it? Because I don't think it's going to help me predict earnings or spending patterns. I've come to the only real conclusion I've been able to make is that some individual businesses might be able to use it to better understand the spending of their customer base, right? If you can accurately describe...
They're doing this. We're seeing businesses pivot to luxury stuff, right?
And others try and, companies that don't focus on the luxury space
Home
are trying
builders,
to...
for Pete's sake. They only build mansions because on the margin it makes sense economically.
I think the other area that it's probably helpful for is trying to better understand things like sentiment and voter blocks and things like that, right? If you looked at just that median number like you described and looked at the economy in 2023 and 2024, you'd look at it and say, well, wages are up, inflation's down, this economy looks pretty good other than the deficit spending, and yet the consumer sentiment was the worst you've seen, and you had a really compelling election that voted the existing administration out of office. And I think that in part helps describe why the K-shaped economy is important. And importantly, I don't think you've seen any reversal of the K-shaped economy.
Yeah, it's not really the
recently.
shape of the. I know the expression is too widely used now. We're not going to be able to shake it, but it's not a K-shaped economy. It more describes trends for different groups of people.
Let's take a quick break. When we come back, markets rebounding a bit from yesterday's action. We'll have a full recap for you next with Wall Street Watch.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
Did you outgrow your timeshare and now you want out? But you can't. You can't sell it, and you can't get out of the contract. Imagine trying to get out of your mortgage. That's what a timeshare is. You can't just call up the bank and say, I don't want to pay it anymore. But we may be able to help you do just that. Listen, a timeshare maybe for you once was a great thing, but now you don't use it much. And they are not easy to get rid of. Plus, you do have to pay for it every month. Qualified timeshare owners can get out of their contract legally and permanently without ruining your credit or even filing bankruptcy. And imagine no more mortgage payment or fees. Call the Timeshare Exit Hotline qualification line now. It's free to learn more.
800-455-7967. 800-455-7967. 800-455-7967. That's 800-455-7967. Paid for by Timeshare Defense.
Nobody wants to think about estate taxes or nursing home costs. But if you want to protect your money, your home, and everything you've built, you've got to get ahead of it. That's where Cushing & Dolan come in. They're experts in estate planning and elder law, and they've just released a brand new free guide called Balancing Asset Protection and Avoiding Estate Taxes. This guide lays out practical ways to keep your assets safe, and yes, even reduce or completely eliminate your estate taxes. If you already have a plan but aren't sure what your risk looks like, or you've been meaning to start one, this guide gives you exactly what you need to take control. So don't wait. Call Cushing & Dolan today at 866-848-5699 and get your free copy of their new guide called Balancing Asset Protection and Avoiding Estate Taxes. That's 866-848-5699. Or you can request it online at LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, this is Chuck and Mike from the Armstrong Advisory Group. We have a new guide available this month titled Retirement Planning for Spouses. Mike, one of the challenges that spouses face is figuring out how to draw income in retirement and the way to optimize that income, given potentially multiple Social Security payments, portfolios, pensions. Where's a good place to start?
Yeah, of course, with a married couple, you have increased optionality about where your income comes from, which of course means increased complexity and all sorts of different decisions to be made. But yeah, first of all, you've got your Social Security. Depending on the work history of the couple, right, you might be talking about taking your own benefit. You could be taking benefits based on the working income of your spouse. There's no choice to be made there, but there is a choice to be made in terms of timing. When do we start those benefits? What's the age difference between the two of us? If there's a pension involved, what sort of survivorship benefit do we take? Do we consider life insurance as an alternative to that survivor benefit? And then, of course, your portfolio between Roth, traditional, and taxable brokerage accounts. There's a lot of decisions to be made on that side as well. So it's a lot of decision making to be made, and that's where having a good, firm plan about which income starts at what point based on our own life expectancies and taxes is really important.
Folks, the guide is titled Retirement Planning for Spouses, and there are two ways you can request it. The first is by calling 800-393-4001. The second is by visiting ArmstrongAdvisory.com. That phone number again is 800-393-4001, or request it at ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Time now for Wall Street Watch. A complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
After a negative start to the month, markets today are in the green, led by a rally in tech, where traders are also monitoring Bitcoin after its recent tumble. Bitcoin rebounding today and trading right around $90,000 right now. The Dow is up by over 0.1% or 72 points higher. S&P 500 is up 0.2% or 13 points higher. NASDAQ up 0.6% or 140 points. Russell 2000 also up by 0.6%. 10-year Treasury yield is flat, currently at 4.10%. Crude oil down about 0.33%, trading right around $59 a barrel. According to several reports, Comcast, Netflix, and Paramount all submitted second offers for Warner Brothers Discovery assets. While Paramount and Comcast made improved offers, Netflix reportedly submitted a primarily cash-based offer. However, a Netflix acquisition of HBO Max could raise concerns among Justice Department officials. Netflix shares are down nearly 1%, while Warner Brothers stock is climbing about 1%. Meanwhile, Apple is shaking up its artificial intelligence leadership, where the iPhone maker landed a Microsoft executive after announcing the retirement of its top AI leader. Apple shares are up modestly elsewhere. Developer data platform MongoDB is seeing its stock surge 25% after posting solid third quarter results. The company also hiked its full-year guidance as booming AI demand lifted its revenue. Shares in Signet Jewelers falling 3% after the parent company 2K and Zales posted disappointing fourth quarter guidance. And Boeing stock is soaring 8% after its CFO said at a UBS conference this morning that the company expects deliveries for both its 737 jets and 787 jets to be up next year. I'm Tucker Silva, and that is Wall Street Watch. And remember, you can watch the show live every day here on our YouTube page. We'll have breaking business news, and all of our content is also archived. So if you want to see an interview or a discussion about a specific topic, it's all there with the click of a button. Just search the Financial Exchange on YouTube and hit that subscribe button.
We're going to talk a bit about the recent Bitcoin rout, and Tucker just mentioned it. It's bouncing back today, but yesterday was off. Big journalists calling it crypto winter again, which I swear that term's come up.
I've seen it going back to 2021, that term.
Yeah, so nothing new for crypto investors in this space. But for some context here, priced in dollars, Bitcoin hit over $126,000 per coin back on October 6th. As recently as last week, 2 weeks ago, it was at 84,000. Now it's sitting at 90,000. This thing is extraordinarily volatile. It was down 7% yesterday, up 5.5% today. But I want to start with some basics, Mark, because we were talking offline about correlations, and specifically correlations between the S&P 500 and Bitcoin. And when you look back a decade ago, it was pretty close to zero. They didn't have much to do with each other. Today, the correlation isn't 1. It's not, you don't see it going up in the exact same way, but the two are much more highly correlated. And I guess I want to start with, what does that mean for investors, and why and how do asset classes become correlated in the first place? Is there a financial theory for this effect?
Very hard to answer. I think both of those questions. Is easier to point out that correlations, which just refer to the degree to which two things move together, it's actually a little more involved than that. It's the degree to which they depart from their averages together. So when we say that Bitcoin's correlation with the broad market, using as a proxy for broad market, say the S&P 500, when we say that it's gone up, and I use daily returns in my little internal example, you could use monthly or whatever period floats your boat, we mean that when Bitcoin is above its average, the S&P tends to be above its average, or vice versa. That's just an empirical, so to speak, statement. It's just what happened.
And the last 2 days are good examples of that. Yesterday, you had Bitcoin down 7%, S&P 500, NASDAQ all down around 0.5% in early trading.
More on
Today,
average.
You've got Bitcoin up 5%. You've got major indices up.
Early on in its history, and it wasn't publicly traded early on. Now you've got a lot of vehicles that allow us to jump in and out, and it's more liquid than it used to be. But early on, it was less tightly related to movements in the broad stock market. It follows from that, if you are constructing a portfolio, the holy grail is imperfectly correlated asset classes, because it makes for a smoother ride. This is why your financial advisor says, well, you don't just want to own big U.S. companies. You want to own a little international. You want to own some small U.S. companies. You want to own some emerging market companies. You want to own some bonds as insurance, that type of thing. So to the extent that Bitcoin becomes more correlated with major asset classes, specifically riskier asset classes like equities, like stocks, it's less useful as a diversifier. That may not matter to you. You may own it for different reasons. It may not be part of a diversified portfolio, or you just may not care. But for institutional investors, it does become a problem.
To me, the correlation is somewhat natural here. It has become much more normalized in terms of an asset class that's investable. To your point, you can pretty easily invest in mimics of it, or publicly traded companies that invest heavily in it through public markets,
Lots of
which
vehicles
was
now,
not really possible at all prior to 2020, and became even more mainstream in the Trump administration. So I think the correlation makes some sense. I think leverage plays a role too, would be my guess, is, hey, when you borrow to invest in an asset class like stocks or like cryptocurrency, and if you're borrowing to invest in the two of them, when they move in the other direction, then your leverage can, by necessity, call you out of positions, and that could be stocks, that could be crypto. So I think that's part of it as well. But I'll tell you, I am once again getting a lot of questions about it. I was meeting with somebody yesterday, and she felt a little bit embarrassed to ask, it seemed like, but she was like, we've got this friend. They just paid $13,000 to attend a crypto investing course, which, boy, does that seem like a scam to me. And they're telling me that I had better get used to crypto and learn a lot about it, because by this time next year, your entire bank account is going to be crypto. And my jaw kind of fell to the floor. Like, that seems incredibly unlikely to me unless you choose to go do so.
Yeah, this is a problem.
But there seems to be just a lot of A, misinformation, B, lack of understanding, and C, get-rich-quick schemes when it comes to crypto.
And that's different than past booms, which had something, I don't know, substantive, concrete underlying them. With the exception of, depending on how far back you want to go in history, you might cite like the tulip bubble and say, well, that wasn't exactly concrete. Well, it was. They were trading tulips. They were real physical entities. The problem with crypto is that it's been around nearly 20 years. It is yet to find a mainstream use. It's used mainly by people who want to launder money, or get it to Russia, or get it to Al-Qaeda.
Or speculate.
These are facts.
In terms of like real uses, I see two of them. It's auspicious uses like you just described, or it's for speculation purposes.
Yeah, but in terms of medium of exchange, it's used mostly by people who are doing illegal things, and it draws in schemers, people who have no background in crypto, like the Trump children, and decide to get into it and make $3 billion in a year. Forgive me, but it draws in people who want to get rich quick. I would not give that to me is not an attractive way to invest capital for the long term. But maybe my perspective, maybe you see that and think, oh, if the Trump kids are in on it, it's got to be hot. I should too. I'm not judging that. I'm saying quickly, it's got all the hallmarks of past things that have ended very badly for people who didn't get in very early, and for people who are easily duped is an unkind word, because it implies you don't know what you're talking about. But I could be easily duped when it comes to crypto or AI because I don't fully understand what's going on, therefore I avoid it.
There's also a lot of financialization of these things that have been going on, right? There's been these single stock ETFs that are used to track companies that are involved in crypto, and many of those have tanked this year. And then you've got the differences between, if I had to nail down the average American and ask them to explain to me the difference between blockchain, Bitcoin, and stablecoin, I think I would maybe be able to come up with a reasonable definition of the three, but I think the average American would struggle to do
Mike,
so.
the fact that we can, and I certainly can't, is a testament to the lack of any practical use for it to this. But maybe the average American, myself included, can't differentiate AC from DC. And okay.
The best use cases that I've heard for it come from the stablecoin piece. Right,
but that's different though than cryptocurrency.
It's very different than cryptocurrency, but a stablecoin, effectively, as far as I can tell, looks to me a lot like a gift card that you would hold at one vendor or a series of vendors, and make it allowable to make payments very seamless between somebody. Let's call it Amazon, right? If I am a vendor and a purchaser on Amazon, I may be able to store my dollars in a stable coin sponsored by Amazon and conduct all my transactions via that stable coin, and therefore avoid the fees charged by Visa. But that has nothing to do whatsoever with Bitcoin, and I think people fail to recognize
as long as the dollar remains a trusted medium of exchange. There are other functions that a currency performs. I'll just focus on that one.
That would be the other means of speculating is, hey, if you think the dollar is doomed, then there are a whole bunch of asset classes that look maybe more attractive.
And there's an argument. We talked about correlations earlier. Bitcoin does, when you control for other factors that influence both, Bitcoin does exhibit a negative, it moves in the opposite direction on average, and the magnitude is not big. You might not even detect it. But there is some evidence in the data, so to speak, that people are using Bitcoin as a dollar hedge. And that's consistent with what you hear its promoters talk about.
Let's take a quick break. When we come back, world economy seeming pretty resilient to tariffs and being acknowledged by the OECD. We'll talk about why next on the Financial Exchange.
Miss any of the show? The Financial Exchange Show podcast is available on Apple, Spotify, and iHeartRadio. Hit the subscribe button and leave us a 5-star review. This is the Financial Exchange Radio Network.
Marc Vonner is the CEO of Veterans Development Corporation. Marc is a career military man, having served for nearly 20 years, and we are so thrilled to have him and his company as a key partner and the presenting sponsor of the DAV 5K Boston. Marc comes from a proud military family, including his father Victor and his brother Timmy. Marc talks often about how serving his country was one of the greatest achievements of his life, and that's one of the key reasons that he chooses to give back to this special community. Marc is honored to continue his legacy that his father started when he built Veterans Development Corporation. Working to help many disabled veterans and their families has become a lifelong goal for Marc, and it's why he's taken the time to fully support the DAV Department of Massachusetts. You can join Marc Vonner and Veterans Development Corporation and help our great American heroes today by making a donation or becoming a sponsor. Simply visit dav5k.boston. That's dav5k.boston.
Nobody wants to think about estate taxes or nursing home costs. But if you want to protect your money, your home, and everything you've built, you've got to get ahead of it. That's where Cushing & Dolan come in. They're experts in estate planning and elder law, and they've just released a brand new free guide called Balancing Asset Protection and Avoiding Estate Taxes. This guide lays out practical ways to keep your assets safe, and yes, even reduce or completely eliminate your estate taxes. If you already have a plan but aren't sure what your risk looks like, or you've been meaning to start one, this guide gives you exactly what you need to take control. So don't wait. Call Cushing & Dolan today at 866-848-5699 and get your free copy of their new guide called Balancing Asset Protection and Avoiding Estate Taxes. That's 866-848-5699. Or you can request it online at LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. When the holidays roll in and the cold settles over New England, find your escape in the U.S. Virgin Islands. Trade the freezing temps and gray skies for warm sun, turquoise water, and that easy island energy you can feel the second you land. This December through early January, St. Croix ignites with the Crucian Christmas Festival, a celebration over a century old. Frederiksted comes alive with colorful parades, live reggae, and streets filled with the sights and flavors of real Caribbean culture. It's the holiday season with a tropical beat. From there, explore St. Thomas with its duty-free shopping and the legendary views at Maggins Bay. Or slow down on St. John, where quiet beaches and national park trails make every day feel like your own private adventure. Getting there could not be easier. No passport is needed, and there's no money to exchange. Just pack light and step out of the cold into pure sunshine. This holiday season, let yourself fall naturally in rhythm with the heartbeat of the islands. Visit America's Caribbean paradise, the U.S. Virgin Islands. Go to visitusvi.com and book your trip today. That's visitusvi.com.
It happens all over Massachusetts. In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Cardiovascular disease is the #1 killer of women,
taking the lives of 1 in 3.
That's more than all forms of cancer combined.
For too long, heart disease and stroke have taken the lives of the women we love.
But we're not giving up because we have something better,
stronger, more powerful.
We have each other.
When we come together and go red,
the more power we have against our greatest health threat.
Visit GoRedForWomen.org today to learn more.
Find daily interviews and full shows of the Financial Exchange on our YouTube page. Like us on YouTube and get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network.
Bloomberg's writing this morning about the world economy being resilient to tariffs. And I'll acknowledge for a moment that compared to my expectations on April 2nd, I do think that the world economy has proven quite resilient to tariffs. But a few things have changed since April 2nd that you have to acknowledge when trying to evaluate the effects of all this. One, on April 2nd, the average effective tariff rate that was announced was somewhere around 40% on goods being imported into the United States. We're now sitting between like 12 and 15%. So let's start off with, that's a big increase in the previous effective tariff rate, but it's a far cry from where we were back in April. Two, there's some question as to whether or not those tariffs are going to be long term. And so trying to measure the effects of all of these after, barely 6 months of collections of tariffs, I think there's some real question.
It's impossible to measure the effects of tariffs, virtually impossible. It's very tricky statistically speaking because you can't hold all the other stuff constant. Economists are very good at looking at individual markets. Like the Trump steel tariffs of 2019, they cost 80 jobs for every steel job that they saved. It's straightforward to do that analysis because
5 years later.
Yeah, it takes time. The study was actually published, took a couple years to get the data. Yeah, but no, you're right. It takes years is the point. And so we're very good at isolating effects when the policy is sort of limited and targeted. This type of stuff, tariffs on everybody, changing almost day to day, varied amounts, very hard to estimate. In the long term, it will reduce growth. There's absolutely no doubt about that. That's pretty well known about tariffs. But don't expect a big recession or something like that right away.
Right, and the other points too, like that all else held equal thing is really important. What would the effect of tariffs be if we weren't spending deficits of 6% of GDP? If the government weren't pouring money out there still.
Well, half of that is interest, but
agreed. But if we weren't running those types of deficits, what would that look like? If the main portions of the U.S. tech industry were not spending all of their free cash flow or a large portion of their free cash flow on AI development and build out and borrowing a whole bunch of money to do so, what would the
it's just very hard to do,
economy
Mike,
look like?
because the model is so immense.
Of course.
And it has to be general. It has to take into account many economy-wide variables. It's easier to keep in mind that when you raise prices on an import, it does a couple things. It could increase inflation in the short term. Indeed, it does. So I'm very comfortable with saying inflation is a little bit higher than without the tariffs. We're at 3%, which is a problem. Maybe we would have been at 2.7%, so a little bit higher. Some have pointed out that tariffs reduce employment, which reduces demand. So tariffs can actually be disinflationary under certain circumstances. But on average, they raise prices. And they also cause capital to flow to industries at which we are, in a relative sense, less productive than foreign countries. So over time, they reduce productivity and thus growth. These are the lessons of history, and any economist would have told you that. But again, dire predictions, Mike, imminent recession, imminent jump in inflation. I don't know of any serious economist that was making predictions like that. Proponents of tariffs say, the economists were wrong. Show me a respected one who was making those types of predictions. You won't find it. That was kind of media hype.
When the holidays roll in and the cold settles over New England, find your escape in the U.S. Virgin Islands. Trade the freezing temps and gray skies for warm sun, turquoise water, and that easy island energy that you can feel the second you land. This December through early January, St. Croix ignites with the Crucian Christmas Festival, a celebration over a century old. Frederickstead comes alive with colorful parades, live reggae, and streets filled with the sights and flavors of real Caribbean culture. It's the holiday season with a tropical beat. From there, explore St. Thomas with its duty-free shopping and the legendary views at Magens Bay, or slow down on St. John, where quiet beaches and national park trails make every day feel like your own private adventure. Getting there could not be easier. No passports needed, and there's no money to exchange. Just pack light and step out of the cold into pure sunshine. This holiday season, let yourself fall naturally in rhythm with the heartbeat of the islands. Visit America's Caribbean paradise, the U.S. Virgin Islands. Go to visitusvi.com and book your trip today. That's visitusvi.com.
Staying on the tariff subject for a moment here, Costco has filed suit against the Trump administration in regard to their tariffs. A bit of legal wrangling that I'm not sure I fully understand here, but there's some concern apparently from legal experts that if they don't participate in a lawsuit prior to the Supreme Court ruling on the legality of the tariffs, they may be ineligible for reimbursements. I don't really understand the legal argument of that, but I'll trust Costco's legal counsel over my own expertise. They join companies like Revlon Consumer Products, Bumblebee Foods, Kawasaki Motors in those lawsuits against the Trump administration. What's notable here? It's just the size of Costco. Right, the third largest retailer by revenue in the country. Filing suit is pretty different than Bumblebee Foods filing suit against the Trump administration, I think. So take that for what you will. Taking a look around at markets, we have a strengthening market as we head towards the 11 o'clock hour here. All three major indices in the green, with the NASDAQ leading the way, up a full percentage point. S&P up 35 points, about 0.5%. Dow Jones Industrial Average also up about 0.5%. We've got to take a quick break, but we've got a lot more to cover, including the code red warning from Sam Altman over at OpenAI. That's next here at the Financial Exchange.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
Are you over the age of 50? Want peace of mind and financial security for your family? Here's an important message to you from Senior Care USA. The average funeral now costs over $10,000. That leaves your loved ones the burden of paying your debts and funeral costs. Our plans start as low as $1 per day and will pay your family up to $30,000 to help pay for your funeral and other expenses. There are no medical exams. Your rates will never increase, and your plan cannot be canceled, regardless of your medical conditions, as long as you make your premium payments. Get up to $30,000 in final expense insurance. Call now for free information. Just answer a few simple questions and get approved right over the phone in just a few minutes. Call right now.
Call 800-378-3818. 800-378-3818. 800-378-3818. That's 800-378-3818.
Marc Vonner is the CEO of Veterans Development Corporation. Marc faithfully served his country from 1981 to 1984, and we're thrilled to have him as a partner and presenting sponsor of the DAV 5K Boston. Marc comes from a proud military family that includes his father Victor and brother Timmy. Marc talks often about how serving his country was one of the greatest achievements of his life, and it's one of the main reasons he chooses to give back to this special community. Marc is honored to continue the legacy that his father started when he built Veterans Development Corporation. Working to help many disabled veterans and their families has become a lifelong goal for Marc, and it's why he's taken the time to fully support the Disabled American Veterans Department of Massachusetts. You can join Marc and help our great American heroes today by making a donation to support the DAV Department of Massachusetts. Please visit dav5k.boston. That's dav5k.boston.
Here at the Massachusetts Department of Elementary and Secondary Education, we are committed to all students not only attending, but succeeding at school. Your presence is powerful. Share why you attend at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
This is the Money Matters Radio Network, WBNW 1120 AM and W275 CM FM, Concord, Boston. The Money Matters Radio Network.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
We're proud to announce that Circle K is now the official convenience store of the DAV Department of Massachusetts. At Circle K, supporting those who bravely served our country isn't just a commitment, it's a heartfelt mission. Circle K is honored to stand with the DAV Department of Massachusetts to ensure that veterans receive the care and recognition they deserve. If you'd like to do your part, please visit davma.org. Thank you for standing with Circle K and the DAV Department of Massachusetts, and thank you, veterans, for all you've done.
When the holidays roll in and the cold settles over New England, find your escape in the U.S. Virgin Islands. Trade the freezing temps and gray skies for warm sun, turquoise water, and that easy island energy you can feel the second you land. This December through early January, St. Croix ignites with the Crucian Christmas Festival, a celebration over a century old. Frederiksted comes alive with colorful parades, live reggae, and streets filled with the sights and flavors of real Caribbean culture. It's the holiday season with a tropical beat. From there, explore St. Thomas with its duty-free shopping and the legendary views at Maggins Bay. Or slow down on St. John, where quiet beaches and national park trails make every day feel like your own private adventure. Getting there could not be easier. No passport is needed, and there's no money to exchange. Just pack light and step out of the cold into pure sunshine. This holiday season, let yourself fall naturally in rhythm with the heartbeat of the islands. Visit America's Caribbean paradise, the U.S. Virgin Islands. Go to visitusvi.com and book your trip today. That's visitusvi.com. If you're retired or getting close, now's the perfect time to take a fresh look at your estate plan. Doing your planning early can help you protect your assets and keep more of your wealth in your family. Cushing & Dolan, the leaders in elder law and taxation, have put together a new guide called Balancing Asset Protection and Avoiding Estate Taxes. And in it, You'll learn how to secure your assets if you ever need long-term care, how to avoid having everything tied up in probate, and how to get a clearer picture of your estate tax exposure. The guide also breaks down real options that may help you reduce or even eliminate your estate taxes when you plan the right way and plan early. Whether you have an existing estate plan or starting from scratch, this guide makes it easy to understand what steps could help you and your family in the long run. To get your free copy, call Cushing & Dolan at 866-848-5699. That's 866-848-5699. Or you can request it online at LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and we have a guide available this month titled Retirement Planning for Spouses. Mike, one of the things that I think is really important to focus on are some of the tax planning items that spouses need to consider basically every single year, especially if there are any kind of age differences between two spouses.
Yeah, real life example here. I was working with somebody recently who spouse just retired and they were trying to figure out where their income is going to come from this year, and the idea of taking some money out of the IRA came up. And so it was a decision, whose do we take it out of, whose is bigger? And the decision ultimately was, we're going to go with the older spouse here because they are going to commence their required minimum distributions earlier.
And so when you're trying to formulate those decisions, whether it's an RMD that you need to consider or potentially, Roth conversions, it's something where the decisions you make one year can have lasting impacts 10, 20 years down the road, depending on the family.
They most certainly can. Again, when you have a married couple, there's increased options in terms of what to do, but that means increased complexity. Things like the widower's tax when you lose a spouse, especially if there's a big age difference down the road. These are things that you can and should plan for because they can make an immense difference in the success of your retirement strategy.
Folks, the guide is titled Retirement Planning for Spouses, and there are two ways you can request it. The first is by calling 800-393-4001. The second is by visiting ArmstrongAdvisory.com. That phone number again is 800-393-4001, or request it at ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Mike Armstrong and Marc Fandetti. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Mike Armstrong and Marc Fandetti.
Good morning. Welcome back to the Financial Exchange. Hope everybody's having a nice snowy Tuesday out there for those who are north and west of the city of Boston, and staying safe and warm out there for our first major winter storm of the year. So good luck to everybody this winter. We've got markets making a recovery from yesterday, specifically crypto markets, clawing back some of their gains from the prior trading session. Well, there's not really a trading session for crypto. It just kind of trades 24 hours a day, so that might not be relevant. But equity markets clawing back as well. We had some stories about the Federal Reserve upcoming meeting on December 10th and the likelihood of a rate cut there. Also a fair bit of just agita about crypto winter and whether or not we are heading for another shakeout of amateur crypto investors in that space. But I've been giving a lot of thought to concentration in the U.S. stock market recently, and mainly because my day job outside of the financial exchange is to describe investment portfolios to people and help them better understand what it is they're doing currently and how it can be improved upon. And when I describe to them, their U.S. stock exposure, it's different than what I used to say, right? Like 10 years ago, it was, hey, this is this diversified. If you own the S&P 500, for example, you own this diversified thing where, a fifth of it is tech exposure, but, it's a bunch of different industries, all of which are participating in profits for the overall index. This year, about a third of the S&P 500's gains are made up by Alphabet and Nvidia alone. So important to frame all that, hey, when I describe people like, hey, where did your investment gains come from this year? Well, largely it was from big tech companies. Furthermore, when I look at the S&P 500 today, nearly half of it is comprised of the top 10 companies in that index. That's, I think, the most concentrated the index has ever been. It's been around since, 1940-something, 1960-something? I know we muddled together data going back further than that, but the S&P 500 itself.
The idea of an investable index fund dates to like the 70s, but those
80s,
were run as separate accounts for banks.
Right. Yeah.
So in terms of
an investable
S&P
500 index, 80s, 90s time frame, maybe.
Yeah. When was the first I should know this. It was sometime in the 80s, but people had been running S&P portfolios since a bunch of researchers pointed out in the 1960s that a market cap weighted portfolio is efficient, and that's all you really need.
So I think the important thing for people to just understand, if let's say you're running your own money or having somebody run it for you, and a major portion of your exposure is the S&P 500, A, you're a lot less diversified than you were a decade ago. B, you're effectively making a bet on artificial intelligence right now. Right, like if you look at the majority of U.S. stock gains recently and the risks to that U.S. stock portfolio, it is largely the exposure of what can artificial intelligence do for these companies, or on the other hand, what can it detract from those companies' performance in the future. And I think it's just, I'm not saying that people should be changing how they're doing it, but I keep hearing investment managers talk about diversification, and they're kind of coming to this point where they're like, well, crypto doesn't diversify as much as it used to. U.S. stocks are all one AI bet. I guess I can go foreign and get some diversified exposure, but if I go to China, it's also an AI bet. And so some acknowledgement here that, okay, yeah, if you are investing in stocks, especially U.S. stocks, yeah, you're making a pretty serious bet on that next dollar going into largely big tech companies.
Today, yes. But if you're averaging in, if you're a long-term investor with a horizon of, 10 years or more, that's a little arbitrary, but
sure.
Let's just purposes of example say that. The complexion of the index could be, as you pointed out, it was different. It will be different.
No doubt.
I suspect tech will not be a third of the index as it is today in 10 years. Not because I think I'm prescient or a profit, but because historically those weights have been unstable as investors decide that companies in different sectors for whatever reason are worth more or less. That's the beauty of a market cap weighted index fund. And I'll say again, it comes out of theory that everybody accepts who works in finance. And whether you know it or not, if you're in finance, everything you do is based on this. As you start with a market cap weighted, that's a fancy way of saying you weight companies in proportion to the value of all their stock. You start with that portfolio. And everybody can own a little slice of that. And as it turns out, under certain conditions, and they're not very stringent, that's an efficient way to invest. You start with that. And again, this is the way all the software and the portfolio construction models, whether you go to Fidelity or Vanguard, or I shouldn't start ticking off names because I'm going to leave somebody off the list, but no matter who you go to, your local bank, they use what's called modern portfolio theory, the name of the whole body of thought that motivates this, to start with. And they start with a market cap weighted index. That's why everybody's got a S&P 500 or a Russell 1000 or a Russell 3000. You can market cap weight just about any equity segment. That's why everybody has that as the core of their portfolio.
So the tag-along piece to this is one of the clear beneficiaries and innovators in the artificial intelligence space, OpenAI, which is not publicly traded. You cannot go invest in this in public indices. You can go invest in companies that are somewhat related, like Microsoft and Nvidia, but OpenAI is not investable in and of itself. It was also the first publicly available large language model tool that was out there with ChatGPT. CEO Sam Altman declaring, quote, "Code red to improve ChatGPT." This is a follow-on story to something we covered a few weeks ago, which was Gemini, owned by Google, recently released an updated version and came out to some pretty big fanfare. And people who are far more qualified to test this stuff than I am ran a bunch of tests and found it generally containing features and usability that was a lot better, or I shouldn't say a lot better, on the margins better than what ChatGPT had most recently released. And so Altman kind of putting it out there as, hey, this is a big threat to our overall success. I'm going to start off by saying that I have no means of measuring the usability or accuracy of either of these tools. I'm relying on outside experts to tell me which one is better. What I am comfortable saying is that early indications seem to be that every company that either creates artificial intelligence tools, provides the energy or infrastructure for those companies to create those tools, or uses any of those tools in their businesses are being treated as winners from a stock perspective right now. Am I oversimplifying things there? That with few exceptions, most everyone who's playing in the AI space is being treated from a stock perspective as though they are going to win the AI race in some way.
If you claim your company has something to do with AI, it will attach some ridiculous multiple to your stock price, is the way I would put it.
What I think we are
seeing... Is that what you meant?
Yeah.
You just claim you're doing AI. That's good for 100% pop in your share price.
Right, or at least it has been.
Yeah, this was true of past, by the way. This was true of the electronics revolution, late 60s, and the internet craze, among others. Yeah.
And I feel very comfortable saying that not every company is going to be a winner in this space. Very comfortable saying that.
Yeah, they probably can't be.
Can't be. And so what does this look like to me? Well, it's another version of the DeepSeek story from January of this year, where some unknown Chinese startup came out there and said, oh, wow, we were able to create a pretty darn good large language model with a fraction of the cost of what ChatGPT is doing. Google didn't do it for a fraction of the cost. They did it for quite a bit of money. But the idea that a technology that's 3 years old can already be substantially leapfrogged by those with deep enough pockets, I think furders that overall truism that we know, which is not every company is going to be a winner.
This is why you can't trust anybody on TV who's talking about this space. They don't. They're mostly carnival barkers. They're promoters. They have skin in the game. They don't fully get it themselves. If you did get this, if you were a coder and you understood, just generally speaking, how these models work, and I don't claim to, by the way, what I do is a little bit of machine learning. But,
hell, that's
but
how I started this segment. Was I have no means of testing which one's better.
I can't. Yeah. So I assume that anyone who's talking about this is trying to sell me something. And unless they are coders themselves, they don't know what they're talking about. And so whatever they're saying is unreliable hype, propaganda designed to get me to buy whatever it is they're selling. All I know is that historically speaking, the first movers, in some domains, the first movers, because of so-called network effects, they become the winner that takes all. Google is an example.
Sure.
But they weren't the first mover. They were an early mover. Their browser eventually displaced others. And if Gemini becomes too successful, they're going to want to break Gemini off of Google's browser. Google's browser has, like 60, 70%? I don't even know off the top of my head.
More.
80% of the market.
Share.
They can't allow the same company that owns the browser to capture the AI market too. They're going to be breaking Google. If Gemini gets too successful, they're going to want to break it. Some antitrust person who wants to put a notch in her or his belt is going to want to break Google Gemini off of the browser. It'll happen if it becomes too dominant. But network effects suggest that it could be. It's very easy for me to, and by network effects I mean we all use the QWERTY keyboard because early on a few people adopted it. I don't want to be on a different standard. We all use Microsoft Word, which wasn't, by the way, compatible with Apple Word early on. You had to translate your file. Once it became usable on any operating system, everybody got on Word. That's network effects. Think of it as a snowball effect.
And by the way, this only answers, this begins to answer one of the questions, which is how difficult it is to create a successful model. The probably more important question is, does any business know how to take that model and monetize it?
It doesn't have to be the fastest. It has to be capable of exploiting those network effects. Attach it to your browser, make Gemini easy for me to use. Oh, it can see the Google page I'm looking at. Oh, can you put that end of day market data in a table for me, Gemini? And it does it. It's looking at the page. That's the type of combination that's going to give it a lethal advantage potentially over something I have to toggle away to. And that also happens to be a little bit clunky. I refer obviously to OpenAI.
Sure.
Maybe Anthropic's having similar issues. I don't know these well enough. All I know is as a user, Gemini is really convenient for my kind of mundane, can you do this really simple task for me type uses.
Let's take a quick break. When we come back, we're playing a little bit of trivia here next on the Financial Exchange.
Hear the Financial Exchange every day from 11 to noon on SiriusXM's Business Radio Channel 132. Keep it here for the latest business and financial news and the trends on Wall Street. The Financial Exchange is now live on SiriusXM's Business Radio Channel 132. This is the Financial Exchange Radio Network. When the holidays roll in and the cold settles over New England, find your escape in the U.S. Virgin Islands. Trade the freezing temps and gray skies for warm sun, turquoise water, and that easy island energy you can feel the second you land. This December through early January, St. Croix ignites with the Crucian Christmas Festival, a celebration over a century old. Frederickstead comes alive with colorful parades, live reggae, and streets filled with the sights and flavors of real Caribbean culture. It's the holiday season with a tropical beat. From there, explore St. Thomas with its duty-free shopping and the legendary views at Maggins Bay. Or slow down on St. John, where quiet beaches and national park trails make every day feel like your own private adventure. Getting there could not be easier. No passport is needed, and there's no money to exchange. Just pack light and step out of the cold into pure sunshine. This holiday season, let yourself fall naturally in rhythm with the heartbeat of the islands. Visit America's Caribbean paradise, the U.S. Virgin Islands. Go to visitusvi.com and book your trip today. That's visitusvi.com.
The Armstrong Advisory Group understands retirement planning, and when it comes to married couples, it can be about more than money. Hi, this is Mike Armstrong, and our new guide called Retirement Planning for Spouses tackles many issues that couples face as they're preparing for later life. This guide keeps things simple, focusing on important matters such as making sure both partners understand where their money's coming from in retirement, being aware of scams, how to stay organized if one spouse outlives the other, and ways to handle gifts, donations, or legacy goals as a team. It's a straightforward look at the steps every couple can take to feel confident about retirement. Call the Armstrong Advisory Group right now at 800-393-4001 to get your free copy of Retirement Planning for Spouses. That's 800-393-4001, or you can request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Marc Vonner is the CEO of Veterans Development Corporation. His dedication to serving our veterans has made an incredible impact on his family and employees. And he is so proud to be the presenting sponsor of the DAV 5K Boston.
My name is Ashley Vonner, Director of Operations at Veterans Development Corporation. I wanted to learn the family business under the guidance of my father, Marc Vonner. VDC is more than a general contractor. It's a service-disabled, veteran-owned small business that goes above and beyond for the veteran community. With Marc's military background, serving in the Marine Corps, our company is committed to supporting the Disabled American Veterans Department of Massachusetts. VDC has been the presenting sponsor for the DAV 5K for many years, striving to spread awareness of this great organization. Working for Veterans Development Corporation has shaped me into the person I am today, and I am proud to be a part of this organization.
Please visit dav5k.boston to show your support today.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, Call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
The Financial Exchange streams live on YouTube. Subscribe to our page and stay up to date on breaking business news all morning long. This is the Financial Exchange Radio Network.
This segment of the Financial Exchange is powered by Circle K Convenience Stores. Circle K is now the official convenience store of the DAV Department of Massachusetts. On behalf of Circle K, thank you, veterans, for all you've done. Time for trivia here on the Financial Exchange. And on this day in 2001, Enron filed for Chapter 11 bankruptcy in the Southern District of New York. CEO Kenneth Lay was heavily involved in Enron's accounting scandal that unraveled in 2001. Lay was indicted by a grand jury and was found guilty of 10 counts of securities fraud at trial. So, our trivia question today, how many years did Kenneth Lay spend in prison? Once again, how many years did Kenneth Lay spend in prison? Be the third person today to text us at 617-362-1385 with the correct answer, along with the keyword trivia, and you win a Financial Exchange Show t-shirt. Once again, the third correct response to text us to the number 617-362-1385. With the correct answer and the keyword trivia will win that t-shirt. See complete contest rules at financialexchangeshow.com.
The editorial board for Bloomberg wrote a piece yesterday that Washington must break its promise on Social Security. And here's what they lay out. Basically, the trust fund, as we all know, is going bust by 2034 because elected lawmakers have chosen to ignore the issue. Any of the fixes that could have been implemented a decade ago that would have been relatively minor and, slowly paced in are no longer doable because we waited until nearly the depletion of the funds to deal with the problem. And so now if you go and fix it, it's going to have to be more significant. They lay out, a number of different solutions, from raising the full retirement age from the currently 67 to 69 and then indexing it for life expectancy. They propose changing the inflation assumptions when it comes to COLA adjustments, which most retirees already find inadequate because it doesn't fully account for the rising cost of health care. They talk about increasing taxes on Social Security in order to fund the trust fund better. But the point they make is a good one, which is the solutions to actually fix the existing the existing program would have to be substantial because we've waited so long. Yeah. But I go back to what I think is the more likely scenario. Washington's going to have to break their promise one way or another. Either they're going to have to break their promises on Social Security and rewrite the program, likely some combination of raising taxes plus cutting benefits, either for current recipients, future recipients, or both. Or they're just going to have to break their promise when it comes to what I view as a key job of every elected official, which is maintaining some degree of economic stability for our country's finances and spend the money out of deficits. And in my opinion, if you're looking for the much more likely solution in terms of how lawmakers deal with the trust fund issue, they write a check. They don't ever come up with taxes to fund it. And there is no compromise. There is no solution to it. It's just, we've got the money. Let's just write a blank check for funding Social Security, even though the program's completely bankrupt.
I guess this was inevitable with increasing life expectancy. We all know that the program was designed and implemented nearly 100 years ago when life expectancy basically didn't extend much beyond retirement. So it was meant to be truly a safety net. That's changed, and our expectations of it have changed.
As have demographics. As societies
that's what I'm getting.
Get wealthier, life expectancy changes, but birth rates change too. And so, none of the formula works anymore, and it's going to get worse probably before it gets better.
It's a little tedious to have to talk about the things that could be done to fix it because obviously there's
nobody would be happy about any of them.
And I got to say, again, for what it's worth, I've never seen such bad fiscal and monetary policy at the same time in my life, nor have I ever, and I'm not the oldest person in the world, but at 53, I'm not the youngest. I've never read about such bad. And don't tell me, well, Andrew Jackson vetoed the second bank of the United States, and I'm not talking about the 1830s. I'm talking about the modern era.
Folks,
Go ahead.
Good.
No, go.
If you are evaluating decisions about your Social Security, it is a pretty important time to do so because of this looming concern. 2034 is right around the corner. And I know a lot of people are making fear-based decisions when it comes to Social Security. I'm here to tell you that even in the face of this, you can't make your decision on Social Security out of fear. It is a critical part of many retirees' future. And if you have questions about it, about the strategies for claiming Social Security and how it'll affect your future, call 800-393-4001. That's the number for the Armstrong Advisory Group. You can book your free call at armstrongadvisory.com or 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Do you think I'm wrong about that, by the way? Like, I seem to have these blinders on where I just refuse to believe that lawmakers are actually going to solve the problem when it comes to Social Security.
No, that's what I was talking about.
Is we're just going to spend a whole bunch of money, right?
They're not.
We're just going to blow out deficits.
It's not our nature to do something about a problem, the magnitude of which is uncertain years in advance, whether it's climate change or this. Democracies don't lend, and I would defend them, but they don't lend themselves to proactively years in advance when the consequences of not doing anything are uncertain. They don't lend themselves to imposing sacrifices today when the reward is uncertain. They just don't.
If your job is to get reelected, you wait until 2033.
Much easier to do nothing.
Quick break, full market update next with Wall Street Watch.
Bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Cardiovascular disease is the #1 killer of women,
taking the lives of 1 in 3.
That's more than all forms of cancer combined.
For too long, heart disease and stroke have taken the lives of the women we love.
But we're not giving up because we have something better,
Stronger, more powerful.
We have each other.
When we come together and go red, the more power we have against our greatest health threat.
Visit GoRedForWomen.org today to learn more.
Marc Vonner is the CEO of Veterans Development Corporation. Marc is a career military man, having served for nearly 20 years, and we are so thrilled to have him and his company as a key partner and the presenting sponsor of the DAV 5K Boston. Marc comes from a proud military family, including his father Victor and his brother Timmy. Marc talks often about how serving his country was one of the greatest achievements of his life, and that's one of the key reasons that he chooses to give back to this special community. Marc is honored to continue his legacy that his father started when he built Veterans Development Corporation. Working to help many disabled veterans and their families has become a lifelong goal for Marc, and it's why he's taken the time to fully support the DAV Department of Massachusetts. You can join Marc Vonner and Veterans Development Corporation and help our great American heroes today by making a donation or becoming a sponsor. Simply visit dav5k.boston. That's dav5k.boston.
The Armstrong Advisory Group understands retirement planning, and when it comes to married couples, it can be about more than money. Hi, this is Mike Armstrong, and our new guide called Retirement Planning for Spouses tackles many issues that couples face as they're preparing for later life. This guide keeps things simple, focusing on important matters such as making sure both partners understand where their money's coming from in retirement, being aware of scams, how to stay organized if one spouse outlives the other, and ways to handle gifts, donations, or legacy goals as a team. It's a straightforward look at the steps every couple can take to feel confident about retirement. Call the Armstrong Advisory Group right now at 800-393-4001 to get your free copy of Retirement Planning for Spouses. That's 800-393-4001, or you can request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today, we're talking about estate tax reduction and asset protection strategies that can help reduce or eliminate your estate taxes. Todd, there are some high net worth clients that would like to reduce the size of their estate, but they don't want to give up access to their assets. Is there anything they can do?
There certainly is, folks. So this is a combination of things. One, you obviously want to do your basic estate planning first. Get your foundation in place, the basic revocable trust planning to help utilize whatever exemptions you don't use up through gifting. Now, when we talk about reducing the estate, we are talking about gifting. But as you said, they don't want to lose control. So there are these special trusts that are designed called spousal lifetime access trusts, where in essence, you use an LLC to keep control of the investments, manage the investments, and make distributions. And then the non-voting shares get put into these irrevocable trusts where you have each other's spouse has access to the assets. So there's a way of getting the assets into those irrevocable trusts, which are now growing outside of your estate tax-free, while at the same time working together to keep control and use what's in those trusts.
The law firm of Cushing & Dolan have been helping families like yours for more than 40 years. Request your copy of Todd's brand new guide called Balancing Asset Protection and Avoiding Estate Taxes by calling 866-848-5699. That's 866-848-5699. Or you can request the guide from their website, legalexchangeshow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch, a complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Well, markets are now flattening after initially seeing a tech rally in early trading. Traders are also monitoring Bitcoin after its recent pullback. Today, Bitcoin is rebounding and trading right around $90,000. At the moment, the Dow is up 0.2% or 95 points. S&P 500 is completely flat. NASDAQ up only 0.1% after seeing a nice rally in early trading. Russell 2000 is up 0.1% as well. 10-year Treasury yield is flat at 4.092%, and crude oil off about 0.5%, trading just above $59 a barrel. According to several reports, Comcast, Netflix, and Paramount all submitted second offers for Warner Brothers Discovery assets. While Paramount and Comcast have made improved offers, Netflix reportedly submitted a primarily cash-based offer. Netflix shares are down about 1%, while Warner's stock is up about 1%. Meanwhile, Apple is shaking up its AI leadership, where the iPhone maker landed a Microsoft executive after announcing the retirement of its top AI leader. Apple shares up modestly. Elsewhere, developer data platform MongoDB is seeing its stock surge 23% after posting solid third quarter results. The company also hiked its full year guidance. In a push against rivals Google and Nvidia, AWS, or Amazon Web Services, announced the public launch of its Trainium 3 custom AI chip, which it says is 4 times as fast as its previous generation of AI chips. Amazon stock is edging higher, and Boeing stock is soaring nearly 8% after its CFO said at a UBS conference this morning that the company expects deliveries for both its 737 jets and 787 jets to be up next year. I'm Tucker Silva, and that is Wall Street Watch. And in the previous segment, we asked you the trivia question: how many years did Kenneth Lay spend in prison? That would be none. Kenneth Lay died 3 months before his scheduled sentencing. Jason from Kingston, New Hampshire is our winner today, taking home a Financial Exchange Show t-shirt. Congrats to Jason. We play trivia every day here in the Financial Exchange. See complete contest rules at financialexchangeshow.com.
Just one more thing that I was running across when it came to that AI story. I finished one of the last segments with the fact that we still don't really understand how these tools are going to be monetized properly and who's going to actually pay for them all, which is somewhat concerning. But Amazon rolling out exclusively to their AWS customers. So let's say you are a business that stores your data in Amazon's cloud. What they are offering is the ability for those business customers to go in and customize a generative AI model. What does that mean? So in the midst of training this thing, let's say, I'm going to take this to our industry for ease of use. Now let's use a different industry. Let's say you are a marketing agency that works specifically with small banks. I don't know. And you write campaigns and design campaigns for them. This offering would allow you to basically take all of your content that you have written over the years and feed it right into a model so that model is more customized and designed to help you build campaigns for those small banks as opposed to just building it all right in ChatGPT or another large language model. They're charging $100,000 a year for that ability.
See how it goes.
I don't know. I mean, you don't think about the previous employers you've worked for, and granted, they've been a lot larger than a small marketing agency.
Only one, actually. I've worked for mostly small companies.
Okay, so
I've only had 3, so it's not like a ton. But
so imagine you are one of those companies, and you have a whole bunch of analyst reports and models that you've built on all sorts of different analytics. You don't think it'd be useful to feed that into an AI model and build it from the ground up?
I'm using it today to do mundane stuff. Like, here's some data, put this in a spreadsheet, and do this other cleanup stuff for me, stuff that might take me 15 or 20 minutes.
Sure.
The engine can obviously do a lot faster. But when you ask it to explore relationships, plot date, chart data, it has no judgment. It may someday.
And that's my question, is maybe by training it on actual work that you've done, that it gets
all models
there
are trained on stuff that people have already.
Frankly,
by the way, training just means fit a model to data. We say training, we give it data, find a relationship. That's training a model. This stuff's been going on for as long as computing power has been available. AI is just a different layer of complexity.
I guess my point would be at $100,000. That's a large amount of money.
What's your ad
to
spend
you,
now?
me, and Marc.
Mike, how much you spending now?
But
that's the question, right?
Yeah, I mean, to me, $100,000 for a pretty small business to throw at training its own large language model does not seem like
it's never
big
going to
dollars.
happen. No, well, what's your ad spend now? If it's $200K, then maybe this makes sense. But I want to see the proofs in the pudding. Yeah. Show me that this isn't just some homogenized pap that every other little bank gets. They're going to have a hard time proving value added. I mean, if I can have somebody come in, do a little song and dance for me, present some ad stuff on an easel, the old I know it's not Mad Men, but I expect to be wooed for my $100K.
Yeah, I agree, but
but I don't.
No, I would want that, but I think there are plenty of businesses that know nothing about AI who are feeling behind the 8 ball because they don't have the expertise nor the money to spend on developing their own internal tool like Goldman Sachs does, who say, whoa, 6 figures and I can customize my own AI model and Amazon's going to help me do it. I think there'll be plenty of customers to pick up this.
Okay, maybe the chief marketing officer needs something to add to burnish their year-end stuff so they get the bonus they wanted, so they come in and say, well, okay, my big idea is we pay Amazon another $100K a year to do this.
Yeah.
The CEO says, I don't want to deal with that. Sure, let's give it a try.
Yeah.
Yeah, maybe.
Yeah. Marc, Financial Times asks, how sticky is U.S. inflation? We're going to get some sense of this on Friday as inflation figures for September get published, which, again, if you're the Federal Reserve trying to make interest rate decisions in December, I don't know how useful September data is other than to tell you that directionally inflation usually kind of goes in the same direction.
That's
but
right, yeah.
How do we answer the question of how sticky U.S. inflation is? Because ultimately in 2022, we were getting readings of 9% on CPI,
I mean, it's not,
and we've come way down from there.
I think when they say how sticky is it, they mean how we introduced the concept of correlation we talked about it. We didn't introduce it.
Sure.
We talked about correlation in the first hour. The way you measure persistence is how correlated is something with its most recent observation. Then its next most recent. Then its next most recent. Fancy term, word of the day, if you want to impress trust your boss? Is it autocorrelated? Self-correlated? Is it serially correlated is another way an analyst might say that. Inflation is persistent. It's highly autocorrelated. That's not what they mean here, though, I don't think. So why did I just go off on that tangent? I don't really know. What they mean, I think, is...
I got lost.
How hard is it going to be? Yeah, I don't know where I am or what I'm talking about.
I just blacked out. What did I say?
I'm aging and I'm confused. I think what they mean is, how hard is it going to be to get inflation down? And all modern macro whole economy models assume that prices there's some rigidity, some stickiness, if you will, in prices. That's why monetary policy works. It's also why inflation is difficult to get down. So the short answer to this is, well, prices are rigid. Prices are sticky on average. That's why you get inflation in everything why the average rate of inflation goes up when oil prices jump. Because you might ask, well, if oil prices or tariffs are only going up on certain things, why don't they go down elsewhere? The modern macro answer to that is, and I'll just be technical and say, nominal rigidities.
And to humanize this a little bit, and not that labor is the only piece of this, but if your boss came to you and said, hey, prices have been moderating a little bit, so I need to take your salary from $90,000 to $88,000, you're not going to say yes.
Yeah, wages are rigid too. Yeah.
Wages are extremely rigid. That is a big portion of what contributes to overall price levels. And
nominally, I should say.
And so, yeah, the idea that prices, they have, the pace that their increases have calmed down quite a bit, but the idea that it's going to be some easy feat to get inflation from 3% down to 2%, is a big question mark in my mind. And at this stage, I'm not entirely sure that it is an actual goal of those who are going to lead the Fed next.
We were getting there, but the Fed is chickening out, essentially. And I'm not saying I wouldn't do the same thing, by the way, because it's well known that I'm a coward. The Fed does not... Everybody's just nodding. Everybody in the office is, yep.
Mm-hmm. His whole family check.
Yeah, he turns tail. The Fed stopped trying to get inflation down. It's turned to fighting weakness in the labor market because getting inflation to 2% would require reducing demand. The Fed is doing the opposite right now by easing monetary policy. It's goosing demand. To get inflation down to 2 would require probably a recession, which, by the way, is what everybody said in 2022. We all acclaimed the immaculate disinflation, but we never really got to 2% because finishing that last mile, or whatever analogy you want to use, would have been economically painful. Now it's too late.
Let's take a quick break as we head towards the noon hour here. Markets are wavering a little bit. We've got the S&P up now only a little bit more than 0.1%. We'll recap it for you and play some stack roulette here next.
Find daily interviews and full shows of the Financial Exchange on our YouTube page. Subscribe to our page and get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network. Nobody wants to think about estate taxes or nursing home costs. But if you want to protect your money, your home, and everything you've built, you've got to get ahead of it. That's where Cushing & Dolan come in. They're experts in estate planning and elder law, and they've just released a brand new free guide called Balancing Asset Protection and Avoiding Estate Taxes. This guide lays out practical ways to keep your assets safe, and yes, even reduce or completely eliminate your estate taxes. If you already have a plan but aren't sure what your risk looks like, or you've been meaning to start one, this guide gives you exactly what you need to take control. So don't wait. Call Cushing & Dolan today at 866-848-5699 and get your free copy of their new guide called Balancing Asset Protection and Avoiding Estate Taxes. That's 866-848-5699. Or you can request it online at LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. When the holidays roll in and the cold settles over New England, find your escape in the U.S. Virgin Islands. Trade the freezing temps and gray skies for warm sun, turquoise water, and that easy island energy you can feel the second you land. This December through early January, St. Croix ignites with the Crucian Christmas Festival, a celebration over a century old. Frederickstead comes alive with colorful parades, live reggae, and streets filled with the sights and flavors of real Caribbean culture. It's the holiday season with a tropical beat. From there, explore St. Thomas with its duty-free shopping and the legendary views at Maggins Bay. Or slow down on St. John, where quiet beaches and national park trails make every day feel like your own private adventure. Getting there could not be easier. No passport is needed, and there's no money to exchange. Just pack light and step out of the cold into pure sunshine. This holiday season, let yourself fall naturally in rhythm with the heartbeat of the islands. Visit America's Caribbean paradise, the U.S. Virgin Islands. Go to visitusvi.com and book your trip today. That's visitusvi.com.
The Armstrong Advisory Group understands retirement planning, and when it comes to married couples, it can be about more than money. Hi, this is Mike Armstrong, and our new guide called Retirement Planning for Spouses tackles many issues that couples face as they're preparing for later life. This guide keeps things simple, focusing on important matters such as making sure both partners understand where their money's coming from in retirement, being aware of scams, how to stay organized if one spouse outlives the other, and ways to handle gifts, donations, or legacy goals as a team. It's a straightforward look at the steps every couple can take to feel confident about retirement. Call the Armstrong Advisory Group right now at 800-393-4001 to get your free copy of Retirement Planning for Spouses. That's 800-393-4001, or you can request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Are you over the age of 50? Want peace of mind and financial security for your family? Here's an important message to you from Senior Care USA. The average funeral now costs over $10,000. That leaves your loved ones the burden of paying your debts and funeral costs. Our plans start as low as $1 per day and will pay your family up to $30,000 to help pay for your funeral and other expenses. There are no medical exams. Your rates will never increase, and your plan cannot be canceled, regardless of your medical conditions, as long as you make your premium payments. Get up to $30,000 in final expense insurance. Call now for free information. Just answer a few simple questions and get approved right over the phone in just a few minutes. Call right now.
Call 800-378-3818. 800-378-3818. 800-378-3818. That's 800-378-3818.
The Financial Exchange is live on SiriusXM's Business Radio Channel 132, weekdays from 11 to noon. Get the latest business and financial news from across the country and around the world, and keep up to date on how it might affect your wallet. That's the Financial Exchange, weekdays from 11 to noon on SiriusXM's Business Radio Channel 132. This is the Financial Exchange Radio Network.
This segment of the Financial Exchange is brought to you by the U.S. Virgin Islands Department of Tourism. There's still time to book your holiday vacation to St. Croix, St. Thomas, or St. John. Enjoy one or all three, and if you act fast, you could be on St. Croix to experience their Crucian Christmas Festival taking place this December through early January. Discover the magic of this long-standing tradition with incredible food, music, and entertainment, or just go soak up the sun, stroll along white sand beaches, and feel the rhythm of the heartbeat of the islands. The USVI is America's Caribbean paradise. Plan your winter escape now at visitusvi.com. That's visitusvi.com.
There it is. Tucker, are you fed up with me talking? Slop bowls? Also, when did we start calling Chipotle bowls slop bowls? Because that seems degrading to Chipotle.
That term come out maybe 6 months ago. Is the first time we put it on the show.
You ever heard of a garbage plate?
No.
It's an upstate New York thing when I was in college. Basically just French fries, ground beef, cheese, like basically whatever they could find, they would just toss into a garbage plate. And
to answer
that's a slop plate. I don't think that a Cava Mediterranean bowl is a slop bowl. I think we're doing that brand a disservice.
I mean, to answer your question, am I tired of the said slop bowl? I would say No, because I think it's the most customizable lunch out there. And I still don't understand why I'm continuing to see these headlines of diners pulling back because they're over the slot bowls. I think it's more of a money thing than anything.
Tucker, you're old, man. You're not the target demo anymore, right? We're talking about 16-year-olds here that don't want slot bowls anymore.
So what are they going to? Back to
Well, again, I think if we stopped calling
McDonald's?
them slot bowls, I think it would do a lot for the brand image. To me, I like you said, I think that this is a cost issue. If I go to Chipotle, it's going to be $16. If I go to Cava, that new Mediterranean startup chain, you're talking
It's all in the same ballpark.
About the same.
Yeah.
So maybe McDonald's needs to put together a slot bowl and prove them all wrong. Just a disgusting bowl filled with
they've done the salad.
Fried chicken chunks, French fries, and whatever else they've got. Big Mac sauce. I think that would work for them.
Well, Big Mac is a slop bowl between two slices of bread.
It's a sandwich, Mark.
I love McDonald's.
It's a sandwich. So apparently some of these brands pulling back on some of that stuff and focusing more on their, Chipotle was made famous by burritos. I think that's largely what they still sell. But those brands that are focusing on just salad, not just salad, what's the sweet greens and others are having a tough time attracting customers.
Of a
but
space.
Again, I go back to, these are all $16 to $20 lunches, and I think people are just feeling like they should pinch some pennies at this stage because they don't have enough money to afford $20 lunches.
If I'm Chipotle, I'm coming out with like a $8.99 burrito, like a smaller one that's available now.
Yeah, I guess if you
that
can,
would be popular.
If you can do it without worsening your ingredients, then maybe that works. But
it's just a smaller burrito.
For a $9 burrito, you're going to have to only have for like ground beef. And
just have a smaller tortilla
lettuce.
And basic ingredients.
That's a terrible idea.
It's not a terrible idea, Michael. It's a great idea, and they should do it.
What do you got for us, Mark?
Bringing things back to finance.
I like talking about slop bowls.
Earlier on, not this close to lunch, though. Very distracting. Earlier on, we were talking about the S&P as being composed of sectors. Information technology, financials. There are 11 of them. Information technology is the biggest. Like we said, 35% of the S&P. So for every dollar, go ahead, Mike.
I just wanted to mention a confusing part of this. The technology sector is comprised of a bunch of those big names. Other sectors, though, are also comprised of what we would consider to be big tech companies.
They slip into,
the communication services sector, for instance, is a big one, and you'd think, communication service. Are we talking about AT&T? Well, yeah, but we're mainly talking about Alphabet. We're mainly talking about Meta, I think, in the communication services sector, even though largely we talk about them as though they're tech companies.
But you made the point that when you put $1 in the S&P, 35 cents is going into more narrowly defined tech companies. And in turn, 20% of every dollar currently, this changes every day, goes into Nvidia. 15% of every, so 6% of your, nearly 6%.
20% of the tech. Okay.
20% of tech, so I'm multiplying fractions here or proportions. 0.2 times 0.35, blah, blah, blah. That's how I get to that number. And Nvidia, I'm rounding up a little bit. Your point was, well, it's never been more dominated by one sector, and that sector is never been as large as it is today. Did I get something wrong?
No.
Okay, good. My point is, on a day like today, you're glad that, and I'm not saying you shouldn't consider something other than a market cap weighted index. That's a personal decision. I am saying that the whole investment profession starts with market cap weighted and then makes bets relative to that. But on a day like today, infotech is, with the exception of one other sector, industrials, infotech is the only sector in the green. So as distended as that part of the S&P may seem, there are times, plenty of times, like the year-to-date period, for example, when it can pull the whole index along. And why, if your objective is just to match the market, not necessarily to beat it, so you don't consider yourself to be a savvy active manager, for example, why it can be dangerous to tilt away from market cap weights.
Yeah, it most certainly can. What I was trying to pull up here, and I'm going to see if I can find it. Yeah, here I don't have the percentages, though.
What is it? What are you looking up?
I was looking up what is the composition of the S&P 500. So to your point, if I invest $1, I believe something like I want the company weights, because I think if I invest $1, something like 9 cents is going into Nvidia, 8 cents into Apple, and another 7 into Microsoft, or something along those lines. And so you take a look at that. And so the top 10, Nvidia, Apple, Microsoft, Amazon, Broadcom, Alphabet, Meta, Tesla, Berkshire. I believe those 10 are making up nearly 50%. And you've got it. So between the top 3, what do we have?
7, 7, 6 is 20, 3, 3, 3, call that 30. 10. Now, it doesn't quite get you there. More like 35.
Yeah.
Call it 40.
But quite
Close enough,
concentrated.
Mike. It's, yeah.
As we close out the show, markets are still holding on to gains here. S&P up 0.1%, NASDAQ up 0.5%. Dow Jones Industrial Average up about 0.33%. We'll be back at it tomorrow, folks. Stay tuned and have a great rest of your day.